welcome on board Joseph Anantaraju, the co-chairman and CEO at Happiest Minds, and also Venkatraman Narayanan, the MD, joining in on the show right now to talk about how their quarterly performance was. Narayanan, hi, morning. If I could start off with you, with your numbers largely in line, how was Q1 versus your own internal estimates, and has it been a good start to the year?
Well, it's been a very good quarter. Let me start by not being sheepish about that. Revenues have grown 14.3% year over year, and I'll take you directly down to our adjusted PAT. That's also grown by a similar number, 14.7% year over year. The interesting point is our adjusted EPS also stands at about 5.34 rupees. Annualized, that's close to 21 rupees. So it's been an all-round good performance, revenue growth. The headcount has slightly increased, utilization has stayed consistent, while also improving on all our return metrics on the shareholder front. We have started the year on a good footing, looking to see how we can meet our guidance number. In dollar terms, we have said 12.5% for the year. So that's something that we are consistently focused on. There are changes in the market which we need to take cognizance of, but still trying to push to reach that number for the year. At the same time, at the operating margin level, we said we'll do between 17 to 18.5%. We are maintaining that at about 17.5%, despite some one-time costs that we have taken in this quarter, adjusted for which we would have been much ahead at about 19%. So if you look at it, a good quarter, a good start for the year.
Morning, Joseph. You've been able to get a CC growth of roughly around 2.9% in the first quarter. Do you think the momentum will sustain?
Sure. So as you rightly pointed out, Venkat mentioned, we've had a very strong quarter. INR growth of 4% and constant currency growth of 2.9%. All things to feel good about, a good way to start the quarter. And this growth has been, if you look at our verticals, this growth has been driven across verticals, barring maybe manufacturing and small dip in TME. All other verticals have grown quite well. You had HCLS leading the way with 9 to 10% growth. You also had high-tech growing quite well with 10%. BFSI has contributed. Retail also inched up a little bit. And if you look at it from a geo perspective, I think the growth was led and driven by three geos. India, which continues to do well for us. We've always stated that India is a market that we are focused on. It contributes 19% of our revenues, among the highest, if you look at other IT services companies. Again, APAC on the back of a couple of large customers, growth in a couple of large customers, and Middle East, where we have two anchor customers that contributed to growth. So overall, I think the stage has been set. Pipeline also continues to look strong and promising, which portends well for Q2.
And lastly then, does your earlier guidance of 12.5% constant currency growth in FY27 remain intact?
That's right. We are holding on to that right now. Early days, I should say. When you compare, you have to look at our year-over-year constant currency growth, which is at about 6.9 to 7%. So the task out there is to get that growth in the subsequent quarters to make sure that we are able to touch that number. But yes, like I said, it's a guidance, and we all efforts are on all hands on the deck to meet those.
All right, gentlemen, great to be speaking with you. Thank you so much for your time.